Hey guys, this is Scott Horne of the Owner Finance Network, and we're going to talk just a minute about subject to versus loan assumption. Two very different things. I mean, these are as far as the east is from the west. They really are out there. And if you like the video, guys, take a minute and like it, please. We would appreciate it. Don't forget to subscribe to our YouTube channel. Make some comments below. We'll do our very best to answer those for you along the way. So buying a home subject to the existing debt versus trying to assume the loan. Guys, I've been doing this for a long time and I have seen very few loan assumptions ever. So let's just kind of go through what a loan assumption is versus what a subject to transaction is. Loan assumption means that you go to the lender, whoever that is, that you actually qualify for the loan, meaning you give them a new application, tax returns, all your financial information. They go through the full qualifying process just as if you're qualifying for a new loan. And then they'll tell you if they would allow you to assume the seller's loan, meaning that you get substituted into the seller's position where you become financially obligated on that assumption transaction, just as if you went out and got a brand new loan on the property. Same thing all the way through. Now, real life, does that happen? Very seldom. If you're dealing with a VA mortgage and you're a vet doing this, it can happen. They seem to be more accommodating in that scenario. But in the traditional lending world, it just doesn't happen too often. Lenders, their preference is to just get a new loan versus assuming it. Now, yeah, it's probably better for you to assume the loan because of terms, conditions, etc. But the lenders, sometimes they're just greedy. They want to start over that new 30-year loan, maybe get some more fees for it. Who knows what that might look like along the way. I'll just tell you historically, I don't see a lot of loan assumptions happen in the marketplace. I can probably count them on one hand in the last 20 plus years or so. So as you can tell, it's not something that happens that often. Now, subject to means we're buying a property subject to the seller's existing debt, meaning that debt is going to remain on the property. The difference between an assumption and a subject to is we're not qualifying for the subject to loan. We might qualify with the seller somehow. We might give them financial information. That's great. But we're not taking on any liability because we're not signing a new note. In some states, you might sign a note to go along with that deed of trust you're executing back to the seller for protection. But oftentimes that note is a non-recourse note, as opposed to having recourse, meaning you now have full liability and an obligation to make those payments. There's a big difference out there. But why would I want to do a subject to deal versus getting a new loan on a property? Because we're dealing with the same issues. There are going to be mortgage loans oftentimes. You've got the same due on sale clauses and things like this that are out there. So what's going on? Well, subject to means we really have limited liability. That's one of the biggies, in my opinion, of buying a home that way. Two, if they're current in their loan, means maybe I'm getting into property for a lot less money out of pocket. That's an important thing to look at. Three, based upon the marketplace we're in, what's going on in the financial marketplaces, we might have the ability to pick up a much lower interest rate than what we could get traditionally on a loan today. It's faster to do a subject to, matter of a 10 days to 2 weeks maybe, and we're done and closed versus 30 to 45 days to go out and get a new loan on a property somewhere along the way. Buying a home subject to the existing debt, we're also getting years of payments paid down. Maybe it's only 1 year, could be 5 years, 10 years, 20 years. That is huge because take a moment and look at an amortization schedule and how you're paying so much interest in the beginning versus principal at the end. And I want to say it takes about 17 and a half years just to get to that break-even point where you're paying the same amount in principal and interest in your monthly payment. The other thing about subject to, as I said, is that we don't have that legal liability on the mortgage that we do going in and assuming it or getting a new loan on the property. That's important. We have what's called moral liability, because we're giving the seller our word we're going to make their payments. We're going to secure and protect that seller with a deed of trust, I hope, so that if we don't meet our obligations, they can come back and take the property back through a traditional foreclosure and do things that protect them along the way. So overall, when you're looking at this, subject to versus a new loan, sometimes you may have to come out of pocket a little bit more to buy a subject to deal because maybe they have more equity. Whereas if you got a new loan on the property, it wouldn't require as much money out of pocket. If you did a loan assumption, it's going to cost you the same either way. You can always go out and borrow private capital for that second lien, maybe on a deal like that as needed. Of course, it's that limited liability I said earlier. Oftentimes it's a lower interest rate, a lesser number of years. But if you buy a property subject to, again, remember that due on sale clause kicks in. Versus a loan assumption, you wouldn't be dealing with that. Versus a new loan, you're not dealing with that because now it's your loan. So there's that trade-off between liability, due on sale, interest rate terms, years, etc., that makes all these dynamics kind of fun to look at and analyze, that helps you make the best decision on how you're going to buy that property. So guys, I hope you found this helpful along the way. If you did, please take a minute and like the video. Make any comments below. We'll do our very best to answer those for you. And don't forget to jump over and subscribe to our YouTube channel as well. We'll see you all next time.